Hello everyone, this is Gracie here. In this video, we will be discussing the problem number 2.9 from the chapter Job Costing. So let us get into the problem. The following information for the year ended December 31st, 2015 is obtained from the books and records of a factory. Here, there are two kinds of jobs, completed jobs and work in progress. They have given the details here. Raw materials supplied from stores, wages, chargeable expenses, materials transferred to work in progress, materials returned to stores, factory overhead is 80% of wages and office overhead is 25% of factory cost. The price of the executed contracts during 2015 was rupees 4,10,000. So they've asked us to prepare consolidated completed job account showing the profit made or loss incurred and also consolidated work in progress account. So here they have not asked us to prepare the cost sheet. They have asked us to prepare consolidated completed jobs account showing the profit, whether the organization or the job is made profit or made loss or losses incurred. And they have asked us to prepare consolidated work in progress account. So here they've given information about completed jobs as well as work in progress. So let us prepare the account here. So this is your consolidated completed job account. So there are two accounts, completed jobs and work in progress. So in both we are going to find out whether we are going to incur profit or loss. So first we will prepare your completed jobs. For completed jobs, raw materials supplied from stores is given. Okay. When we get into the account, debit items and credit items. So according to the golden rules, you have real account, nominal account and personal account. When it's real, debit what comes in, credit what goes out. When it is personal, debit the receiver, credit the giver. When it is nominal, debit expenses and credit all incomes. So that is the rules what we are going to follow here. So when it is debit, based on the real, nominal and personal, you will be applying the golden rules. So the first transaction here is raw materials supplied from stores. Yes, we are getting raw materials from the stores. So we are going to debit two materials because it is coming in two materials 90,000. Next you have wages. Wages is 1 lakh. So wages is also an expense. So we are debiting an expense. So to wages. So before that we will have materials. We need to check whether there are any transaction related to materials. So let us get into the question now. Raw materials supplied from stores is 90,000. So after this we have other expenses. So when you look into the fourth line, you have materials transferred to work in progress, which is 2,000, and materials returned to stores 1,000. So now here they have stated materials transferred to work in progress. That means from the raw materials which is supplied from stores, which is 90,000, 2,000 material is transferred to work in progress. So from this completed job we need to minus this 2,000 as this material is going out. So here less transfer 2,000 because this material is being transferred to work in progress. So that is your next account what you will be preparing. So what is the worth of the materials? 2,000. There are either two ways to account it. As I told, debit what comes in, credit what goes out. As this is transfer of materials to the work in progress, you can account this as by transfer to work in progress 2,000. You can account it in credit side as well, or directly you can minus in your debit side. Both the methods are right. So now we are materials 90,000 less transfer to work in progress. We have considered here itself in the debit side by minusing from your materials, or either you can consider this transfer to your credit items as to transfer to work in progress, two materials transfer to work in progress 2,000. Either way you do, you get the same net profit. So now let's transfer 2,000. Next you have the other transfer also made. Materials returned to stores. Yes, how the materials which is supplied from stores is 90,000, out of which work in progress is being transferred. Certain materials are transferred to work in progress 2,000. Their materials is returned to stores 1,000. So this will also be minus from these materials. So 2 less returns 1,000. So total materials which is going out is 2,000 plus 1,000, 3,000. So out of 90,000 minus 2,000 minus 1,000 will give you 87,000. Next, other expenses what you have is wages. So wages is 1 lakh. So we will be considering wages in your account. Next you have chargeable expenses. Chargeable expenses 10,000. So chargeable expenses as 2 chargeable expenses 10,000. So the format will be same as you are preparing job cost sheet, but in the form of account. As it is when it is stated as prepare any account, it would usually be in your debit and credit column wise statement. So 2 chargeable expenses 10,000. So now you will add up all your direct expenses and you will get your prime cost, which will be 1,97,000 is your prime cost. Next you have materials. Materials transport is done, materials return is also done. Next you have factory overheads. After prime cost you need to find out your factory overheads. They have stated factory overhead is 80% of wages and office overhead is 25% of factory cost. Okay, your wages is how much here? Your wages is 1 lakh. In this 1 lakh, 80% is your factory overhead. So 1 lakh factory overhead is 1 lakh. 1 lakh into 80% will give you 80,000. So your prime cost minus prime cost plus your factory overhead will give you your factory cost. So 1,97,000 plus 80,000 will give you 2,77,000. After your factory cost, you need to check whether you have any office and administration expenses. You get into the problem, they stated and office overhead is 25% of works cost. And office overhead is 25% of factory cost. It can be also called as works cost or factory cost. So 25% of factory cost. So how much is your factory cost? 2,77,000. So 2,77,000 into 25% will give you 69,250. So your office expenses is also found. So the total of this will be usually your cost of production when you prepare your cost sheet. So we will check whether we have any selling and distribution overhead. So the question states the price of the executed contract during 2015 was rupees 4,10,000. Yes, so they have stated the price of the executed contract means for the contract which has been rendered, the price or the sale amount what they have received is 4,10,000, which year 2015. If you look in the first line, the following information for the year ended December 31st, 2015 is obtained from the books of records of the factory. So this completed job is for the year December 31st, 2015. So this sales will belong as it is during 2015. This sales of 4,10,000 belongs to completed job. This work in progress will continue after 31st December, that is from the next year, that is from January 2016. So as it is 2015, this 4,10,000 belongs to completed jobs account. So we will consider the sales in your completed consolidated completed job accounts in your credit side because it is an income. By sales 4,10,000. So out of your total expenses till here, when we minus it by sales, we will be getting your net profit. So net profit will be your 63,750. So the total sales 4,10,000, out of which your prime cost, factory cost and your office overheads is minus till your office overhead. You will be getting your profit 63,750. So you will be getting profit for this consolidated complete jobs accounts. So now let us get into your next account to be prepared. What is your next account to be prepared is they have asked to prepare consolidated work in progress account. Yes, they have given information about work in progress. So you'll find out whether you're getting any income out of it. So now your consolidated work in progress account, 2 materials two materials they've given 30,000. So you will consider materials 30,000. So in the question next they have given any information related to materials is material transferred to work in progress 2000. Yes, from completed job 2000 is transferred to work in progress 2000. So so as it is transferred from completed job to work in progress, you are receiving materials. So you will add transfer materials from completed job. So from the existing materials 30,000, you will add transferred materials which is 2000. So 30 plus 2 will give you 32,000. Next you have wages. Wages is 40,000. So you will consider wages 40,000. Next, after your wages, you have chargeable expenses. Chargeable expenses 4,000. 4,000 is also considered. So total of your direct expenses will give you your prime cost, which is 76,000. So after your prime cost, you need to check whether you have factory overhead. Yes, if you look into here, the same statement is applicable as per your previous year. Factory overhead is 80% of wages and office overhead is 25% of factory cost. So your factory cost is 80% of wages. So how much is your wages? Your wages in this work in progress account is 40,000. So 40,000 into 80% will give you 32,000. So prime cost 76,000 plus factory overhead 32,000 will give you 1,08,000. So next you have office overhead. And in the question they have stated office overhead is 25% of works cost. So in your work in progress account also the same percentage would be applicable. So 25% of works cost are factory cost. Much is your factory cost? 1,08,000. So 1,08,000 into 25% will give you 27,000. So in this problem, as per the completed jobs, they have not given any sales amount. So the sales are yet to be made. So what is the expenses what you have met till now? The calculation will be shown. If there is any sales, you will be able to find your net profit. As this is work in progress account, the work will still continue. So the exact profit or the sales amount cannot be estimated. So the details here after your office overhead, the total you will be getting 27,000. When your total 1,08,000 plus 27,000, you will get 1,35,000. As it is a work in progress account, it will be carried forward. So the balance of it will be carried by balance carried down as 1,35,000. This closing balance will be the opening balance for your next year. So it will be the opening balance for next year. So it is 2015. In the question it is stated as in the solution it is stated at 2005 and 2006. Please be careful. It is 2015 and 2016. So 2015's work in progress account is transferred will be your opening balance for your 2016. Next problem is problem number 2.10. From the records of XYZ Limited, the following budgeted details are available. Direct materials 1,99,000, direct wages, and they've given machine shop, assembly shop, and they've given the hours, how many hours the machine shop is working and how many hours the assembly shop is working. And based on that the wages are decided. So 12,000 hours for machine shop and assembly shop is 10,000 hours. So which is the cost for it 63,000 and 48,000. Then works overhead for machine shop and assembly shop is given here. Then administration overhead is given, selling overhead and distribution overhead. Assuming that the company follows absorption method of costing, you are required to prepare a scheduled overhead rates from the figures available stating the basis of overhead recovery rates used under the given circumstances. Work out cost estimate for the following job based on overhead so computed. Direct materials 25 kg at rupees 16.80 per kg, then 15 kg at rupees 20.50 0 per kg. Direct labor on the basis of hourly rate for machine shop and machine assembly shop. Machine shop 30 hours, for assembly shop 42 hours. So here they've given information about XYZ Limited, the following budgeted details. So this is the budgeted details, and this is a random budget which is made by the company. Then they've asked you to prepare, assuming that the company follows absorption method of costing. Absorption method of costing means where you will show all kinds of cost in one cost sheet. So where all kind of expenses will be consolidated and which will be shown in one cost sheet, which observes all the expenses irrespective of fixed variable, or the any expenses will be considered in the cost sheet. So there's no specification of expenses here. Every expenses of every job will be considered. So that is called as absorption method of costing. So under this method, you are required to prepare schedule overhead rates. So you need to show schedules for calculating your expenses from the figures available, stating the basis of overhead recovery rates used under the given circumstances. Circumstances here are, they have given the estimated circumstances where materials only till 25 kg and 15 kg and per rate is given to be calculated, and labor they have given number of hours each shop is working, and you need to find out what is the cost for 1 hour. When based on that you will be doing the calculation. So this is the data which budgeted details which is given. Based on this budgeted details you will be preparing your estimated cost sheet. So now let us get into the calculation. So this is your cost sheet for the period. So you first prepare the cost sheet which is budgeted, and you will find out the total cost. Then you will be preparing your estimated cost sheet as per the information which is given. So your cost sheet, this is your A point cost sheet for the period. So your direct materials is 1,99,000. You have considered 1,99,000. Then direct wages, there are two shops. For direct wages, you will be paying wages for machine shop as well as assembly shop. For machine shop, how much is your direct wages? 63,000, 48,000. The 63,000 and 48,000 is for machine shop which has worked for 12 hours. They are getting 63,000. For 10 hours, they are getting 48,000. So your total direct wages is 1,11,000. 1,11,000. So your direct expenses total will give you your prime cost. Your prime cost will be 1,99,000 plus this direct wages of both the shops, which will give you the total is 1,11,000. So the total of 1,99,000 plus 1,11,000 will give you 3,10,000, which is called as your prime cost. After your prime cost, you need to find out your works overhead. So your works overhead information is, machine shop is getting will charge 88,200, and assembly shops works overhead will be 51,800. So the total of it is 1,40,000. So you will be considering it as 1,40,000 is your works overhead. So prime cost 3,10,000 plus works overhead 1,40,000 will give you 4,50,000, which is your works cost. So after your works cost is your office and administration overhead. So in this problem, they've given your office and administration overhead. Office and administration overhead. Your administration overhead is given, which is 90,000, which you will be considering administration overhead 90,000. So works cost plus administration overhead 90,000 will give you your cost of production, which is 5,40,000. After getting your cost of production, you need to find out your find whether you have selling and distribution expenses. Yes, you have selling overhead separate and distribution overhead separate. Selling overhead is 81,000. You have taken 81,000. Then you have your distribution overhead, which is 62,100. You have taken 62,100. So the total of your selling and distribution added with your cost of production will give you your total cost, which is 6,83,100. 100. So you will stop till here because details about your profit is not stated. So it is enough to find out till your total cost. Your total cost is 6,83,100. So this is your cost sheet as per your budgeted cost sheet. So now we will prepare your estimated cost sheet based on the information which is given in the question. So here, assuming that the company follows absorption method of costing, you are required to prepare a schedule of overhead rates from the figures available, stating the basis of overhead recovery rates used under the given circumstances. Okay. And B, they've asked you to work out, telling they've given you direct material and direct labor. Based on these hours and based on these kgs, you will be considering in your problem. So let us prepare your estimated works overhead. Before that, we need to prepare your schedules. So this is the schedule. First, when we get into the problem, they have given us the information about direct materials, 25 kgs and 15 kgs for 16.80 k per kg and 20 rupees for per kg. So let us consider your direct materials. So point B calculation is cost estimate for job. So this is your estimated cost sheet. Direct materials is for 25 kg at rupees 16.80 per kg as per the question we have taken. Then 15 kg at rupees 20 per kg. So 15 kg at rupees 20 per kg will give you 25 into 16.80 will give you 420, and 15 kg into rupees 20 will give you 300. 420 plus 300 will give you 720 rupees. Next you have direct labor. Direct labor, as per the question they have stated, direct labor on the basis of hourly rate for machine shop and machine assembly shop. So here, this as per your estimated job cost sheet, machine shop is worked only for 30 hours and assembly shop is worked for 62 hours. So the labor charges is charged based on the hourly rate. So here the number of hours they worked is 30 and 42. So you need to find out the cost for 1 hour. Here, as per your budgeted, they are paying 12,000 hours, they are getting 63,000, and for 10,000 hours they are getting 48,000. Here in the estimated job, your machine shop is working only for 30 hours and assembly shop is working for 42 hours. So you need to find out for 30 hours what is the per hour rate and for 42 hours what is the per hour rate. So how are you going to find that is by the schedule you'll be finding, that is your working note, you'll be finding the calculation to find out your per hour rate for these machine shop and assembly shop for your estimated cost sheet. So direct labor hour rates are calculated as under. For machine shop, 63,000 divided by 12,000. From where did we get this information is from the question. In the question they have stated 12,000 hours they are getting 63,000. So for 1 hour how much they will get, by dividing you can find out. So 63,000 divided by 12,000 hours will give you 5.25. This is rupees 5.25 per hour. So for machine shop will get for 1 hour 5.25. The same thing is applicable for assembly shop. For assembly shop, the rate is 48,000 for 10 hours. Then for 1 hour how much is it? So 48,000 divided by 10 hours will give you 4.80. So it is rupees 4.80 for 1 hour. So this rate can be considered for calculation of direct labor hours. So we can go to the cost sheet now. Direct material is done. Next, direct labor, we have found out the per hour rate. So per hour is 5.25 and 4.80 as per the calculation. 5.25 and 4.8. Now we will calculate. So how many hours is machine shop working? As per the question, machine shop is working for 30 and assembly shop for 42. So 30 into 5.25 and 42 into 4.80, which will give you 157.50 and 201.60. so add both the shops direct labor, you will be getting 359.10. so the total of your direct materials plus direct labor will give you 1079.10, which is your prime cost. The total of your direct expenses will give you your prime cost. So after this you will be finding out, you will be adding your factory cost and your administration overhead will be followed. So let us look into the question whether you have factory cost. So as per the question here, they've given the information, you need to find out what is your factory cost. For your estimated cost sheet, the total hours, how much it is worked, that is machine hours worked is, machine shop is worked for 30 hours, assembly shop is worked for 42 hours. Based on these hours, you will be finding out your other items in your cost sheet. So now your works overhead. So machine shop, usually the how many hours is a particular labors are getting, based on that your works overhead, that is your expenses in the factory will also be decided. So here 12,000 hours and 10,000 hours it is working, so the cost sheet is prepared based on that. Here they have stated 30 hours and 42 hours. In this cost sheet, based on 30 and 42 you will be calculating. So now we will do the working note for your works overhead. So in this your budgeted cost sheet, it is 88,200 for machine shop. For assembly shop it is 51,800. So you need to find out, this is an expenses which is incurred for 12,000 hours and 10,000. So you need to find out for 30 hours and for 42 hours how much is it. So the calculation goes on like this: works overhead is equal to hourly rate is equal to calculation of works overhead. Hourly rate is equal to overhead amount divided by number of hours. So for machine shop, the overhead amount is 88,200, and how many hours is that particular job being done is for 12,000 hours. So 88,200 divided by 12,000 will give you rupees 7.35 per hour. The same is applicable for assembly shop. The cost is 51,800. 51,800 is your works overhead, which is for 10,000 hours. So you need to find out for 42 hours. So for per hour you will find out 51,800 divided by 10,000. 51,800 divided by 10,000 will give you 5.18 per hour. So this is your per hour rate for your works overhead. So we will follow your cost sheet. Works overhead is equal to machine shop 30 hours and assembly shop 42 hours. So for 30 hours, the cost what you have found out is there in your working note. For 30 hours it is 7.35, 40 hours it is 5.18. So the 30 into 7.35, this amount is found out from your working note. 30 hours into 7.35 will give you 157.50. For 42 hours it is 5.18, which will give you 217.56. so when you add your 157.50 plus 217.56, you'll get 438.06. so this is your works overhead. So the total of it is 1,517.16. Your works cost is 1,517.16. Next you'll be finding out your administration overhead. So to find out your administration overhead, the formula which is already taught or already learned from the previous video is administration overhead divided by works cost into 100. So you will be using that formula. So the working note here is administration overhead as a percentage of works cost. Administration overhead will always be the percentage of works cost. Your administration, your selling and distribution will be a percentage of your works cost for every problem. So administration overhead divided by works cost into 100. So your administration overhead is 90,000 in your previous year. So your previous cost sheet what you have prepared first, so your administration overhead is 90,000 divided by works cost is 4,50,000. So the same thing is considered here. 90,000 divided by 4,50,000 into 100, you will be getting 20%. This percentage would be used in your estimated cost sheet. The formula calculation figures will be the already budgeted cost sheet figures or your previous year's figures. So the percentage will be used for your estimated or current year's calculation. Please do remember that. So from your previous year's data or from your budgeted cost sheet data, you have got the percentage, which is 20%. So now you will be calculating your administration overhead is 20% of works cost. How much is your works cost here? 1517.16 into 20% will give you 303.43. So 1517.16 plus 303.43 will give you 1820.59. So works cost plus administration overhead will give you your cost of production, which is 1820.59. After your cost of production, you need to find out your selling and distribution overhead. So your selling and distribution overhead formula also will be same. Selling and distribution divided by works cost into 100. So selling and distribution overhead with your previous year's data or the budgeted data is 81,000 and 62,100. So let us consider it as 1. So the working note is selling and distribution overhead as a percentage of works cost. Selling and distribution overhead divided by works cost into 100. So you will add both your machine shop. Two shops are there. You will add both the expenses. Machine shop plus assembly shop divided by works cost into 100. So how much is your machine shops selling and distribution? 81,000 and assembly shops is 62,100. So which will give you divided by 4,50,000 into 100, which will give you 31.80%. Next, after your working note, selling and distribution overhead is considered for both your machine shop and assembly shop. The selling and distribution is similar. You can either do selling divided by works cost into 100 and distribution divided by works cost into 100. Instead of that, it is better as it is as machine and assembly shops expenses together. You can consider selling and distribution together. It will be either divided, it will always be divided by your works cost. So consider both together both is considered together in this problem, selling and distribution. That is why we are adding 81,000 plus 62,100 divided by 4,50,000 into 100, which will give you 31.80%. So you've got your selling and distribution overhead as well. You can calculate it together or you can calculate it separately, but in the while preparing the cost sheet you need to be careful. So your selling and distribution is 31.8% of works cost. So how much is your works cost? Here 1517.16 into 31.8% will give you 482.46. So your cost of production plus selling and distribution over their selling and distribution cost, the total of it, you will get your total cost, which is 2,302.05. This is your total cost. As there is no information about the profit, there is no need for you to calculate profit here. So this is your total cost what you have got.